Yes, I'll try to be better groomed for the next one.
I'm not sure if we should step in.
You're in. You're on.
We're on. Okay, sorry, I didn't really hear the green light completely. But thanks for having us tonight, Mr. Mayor and Council. We've been working on evaluating this project of the Hummel Bridge with basically bringing HP, and Tashi is here today. He'll talk more to the specifics. You were mentioning a little bit about me, so I'm the engineer with the municipality of East Ferris, but I do also shared services agreement with surrounding neighbors, and in this case, I understand that the Powassan Bridge is a bit shared on this case, but that's a little bit of the involvement or implication at my end. And looking at the situation, that was one recommendation that we brought to council on the previous report, and it was to further investigate and bring Tashi from HP Engineering to further evaluate doing like underwater investigation and so forth. So Tashi prepared a document for you tonight, and I'll let him take over the floor, and I'm sure that he's going to welcome any questions as we go, or clarification as it is. So that's for me, and then Tashi, please come and join us. I'll mute my mic to make sure there's no interference.
Okay, can everybody hear me? Yeah.
Yeah. Yes, thank you.
All right. Well, thanks, Antoine, for the introduction, and thanks for having me, Mr. Mayor and councillors. So I'll just give a quick introduction here. So I guess we were retained by Nipissing to basically do a more detailed investigation. So we've actually been doing the OSIMs for this particular structure for Powassan, I think, for the last few cycles anyways. We don't do them for Nipissing. It's a shared bridge, so they're both done. So very similar OSIM. So we've been doing it for the last few years. So we have a bit of familiarity with the bridge. So this year it was brought to our attention that there was a plan to possibly replace or rehabilitate the bridge, or at least have a little better look at it. So we got involved, and our recommendation was basically, well, before we jump to replacement, we should probably take a look, do an underwater investigation, because there are pretty significant structural components of the existing bridge at the piers that are buried under the water. So we suggested, well, it wouldn't be a bad idea to look at it, have a look, and then from there do an analysis, verify the existing load posting, and then go from there and take a look at what are our options in terms of, can we fix it? If so, how long do we think we have, or do we just jump right to replacement? So I think we, going into it, the thinking was, well, we're probably going to need to replace it, and well, as it turns out, that's probably the best option for the long term. But we still have to go through the process. So essentially, what we did was back in September, we went to the site ourselves, our engineers from site, and we retained Dundee Marine. They're just an underwater diver, so they have divers who were on the boat. So Antoine was on site with us that day too. He'll remember, but we basically just did a detailed inspection of the underwater components of the pier. Take a look. There's some steel components underwater. There's the original concrete abutments and wing walls underwater. So we wanted to get a good look at those, and also to see underneath on the underside of the bridge, because you generally can't see as well from the OSIMs because you're not on a boat. So we did that, and from that information, we took site measurements. We have some existing drawings. We reevaluated the bridge. So there is an existing load posting there now. I think it's 17, 23, 33 ton. And we basically revisited it. Now, there's actually an interesting structural thing with this bridge on how the truss elements were constructed. They're a little bit oddly sized, which is a little uncommon. So that posting that was actually done, it's obvious that the engineers who did it last time, I don't know when it was done, but they also considered it, because when we looked at it, we basically ended up with the conclusion that we're okay keeping that existing posting as it is. I know there was some discussion of possibly having to lower it, but we're comfortable leaving it as is for the short term until something's decided. It's not going to last for 20 years, but just short term till a decision's made as to what we're doing. So that was step one. We said, okay, we vetted it. We're okay with that existing posting as is in its existing condition. We did a good detailed investigation of the truss and all the components. So then we went on to looking at options. So, we have a fair bit of experience in this field. We've done a lot of rehabilitation, or I personally as well, the engineers, with a lot of these older style truss bridges, and there's often a way to rehabilitate them versus replace, although rehabilitation usually comes with the downfall of it's not going to last as long. So with this bridge, we did look at it. So we ended up arriving that there's generally just sort of two options here. Well, there's a do nothing, but that's not usually an option here, because do nothing doesn't get you anywhere in a few years. But because of the age of the bridge, so the bridge is actually not in that bad condition considering its age. It's a 1925 structure, but it is quite old. So, and it's only undergone, to our knowledge, one sort of known rehabilitation back in '87. So it hasn't been, typically when you build a new structure, you're supposed to every 25 years or so do a relatively significant intervention, sort of a rehab at 25, a rehab at 50, and then at 75, you plan on replacing it. So this bridge, I think, has stood the test of time. It hasn't been rehabilitated all that much. So anyways, we did look at it, and we did come up with an option whereby we could rehabilitate it. But the only issue is it's not a simple rehabilitation. It would require a sort of a deck replacement. There's a fair bit of the structural steel components. The stringers are sort of secondary beams that need to be replaced because they're fairly corroded. There are some steel repairs that we'd want to do on the trusses. Some of the underwater steel components at the piers also in some deterioration. So those would have to be fixed in case the underwater concrete. So recoating the steel. So there is a fair bit of work. It's not, we were kind of hoping going in, maybe there was an option to sort of go in there, do something relatively inexpensive and quick, and give ourselves, 15 to 20 years, but we didn't feel comfortable. We don't think there's an option here. So if you're looking at rehabilitation, our rehabilitation is actually a fairly major rehabilitation, but it would preserve the structure in its current location, in its current appearance. We wouldn't be changing the appearance configuration. And, we estimated that it's going to cost around $1 million. So that's the cost for the rehab. And for that, because of the age of the structure, even though we're fixing it, there's still, we're not comfortable sort of telling you, well, beyond that, we say 15 years, probably 15 to 20 years. Beyond that, there's no real, you would probably be looking at having to replace it anyways at that time frame. So, it's a fair bit of money to spend for sort of a 15 to 20 years. So that was the rehabilitation option we looked at. Now, the second one is obviously a full replacement. Now, for the replacement option, we jumped right to, there are probably a few ways you can do it. You could replace it sort of structure in kind with a 3-span structure, try to match the look. But to do that, you would end up reconstructing those existing piers in the water. And generally these days, we always tell the municipal owners and our clients, if you can avoid as much in-water work as you can, that's better for everybody, environmentally, for approvals, for costs, etc. And this is a fairly deep waterway. It's a fair bit of water, so it would probably be pretty expensive. So what we did was we looked at, for that span, the existing bridge is about 35 meters long. So we looked at going to just a single span structure, which would be a 38 to 40 meter clear span truss that would essentially span from abutment to abutment. We would build new abutments. As a matter of fact, we would build them in behind the existing. So that's kind of the approach we took and said, that's the new structure. It would be a 40 meter clear span. We would remove the old structure. We might leave some of the old abutments in place because they may be deemed as fish habitat. I'm not sure. So we'd have to look at that, but we would do that. You would get a structure that had a design life of 75 years. That's sort of the minimum the code requires. And you would have to do rehabilitations at the 25 and 50 year period. And that would be a full structure, no load restrictions. So we looked at a few scenarios. We said, well, for a single lane, if you want to match sort of what you have there now, which is roughly just a single lane structure, which we would consider perfectly acceptable for this scenario, unless there's a need to widen it, but your approach roadways are fairly narrow. So I don't know that there's a need to make it a 2-lane unless there's a desire to make it 2-lane. So we looked at cost there, and we're in and around $2.5 million to sort of replace it with a similar single lane. And this is consistent. We had some costs from a similar bridge. I think that was tendered out last year or something, and it was, so the prices I think are fairly accurate. And then there is the option too to take that same bridge and make it a 2-lane. So that we sort of threw in some costs, and we had about $3 million if you wanted to go with a 2-lane alternative. And then also if you wanted to incorporate a sidewalk on it, I don't know, there's no sidewalk on the approach, but it's perhaps desired to have one outboard of the existing if people want to walk over it just for added safety. And that probably looking at somewhere around $500,000, because there's also probably a fair bit of approach roadway work to accommodate that. So those are really the two options we looked at in general. So you have sort of a comparison, a rehab for $1 million for about a 15 to 20 year service life extension, and then a full replacement in kind for about 2.5 times that cost. But then you're getting a structure that's not load posted and it has a much longer service life. So that's sort of how we looked at it. Then we looked at, what studies are needed. So we just went over it in terms of, it may not be 100% accurate with studies because the environmental rules sometimes change from time to time, but I sort of revisit. I think we're fairly accurate. So for the option 1, it would be considered an A or an A+. So you have you'd probably get a survey done. You would need a biologist to do some species at risk screening. You likely would have to go to DFO just for approvals, but they likely wouldn't have any big issues. They may require authorization, but we're not sure. So archaeological studies, those were not anticipated if you're rehabbing, because you wouldn't be doing a lot of digging and you're not really doing too much ground disturbance. Now those could be triggered. We always caveat that, because for archaeological, when you do if you do an indigenous consultation or Aboriginal consultation, sometimes it gets triggered through there. But anyways, that's not a big component. Wouldn't really need any geotech investigations. For cultural heritage assessments, again, when you review the guidelines, that shouldn't be required if we're sort of maintaining the appearance and the configuration. So you probably don't need to get into those. So we have an estimate for cost there. I would estimate around 40,000 or so for design. That would include the investigations and stuff like that. And then for option 2, well, that's a little bit more extensive if you're replacing it. So you have a few other approvals that likely get triggered, and one of them is the the stage 1 archaeological still may not be required, although I would guess you probably would have to do it in this case. So it may not be a bad idea. Then geotechnical investigations would need to be done just to verify where rock is and what we can found the new structure on. And you would definitely need to do at least a cultural heritage evaluation report. I don't know if an impact assessment would be required. It would probably be contingent on the results of the heritage evaluation report, whether there was deemed to be any heritage value, either cultural or built heritage of that structure. But you wouldn't know until you did the evaluation. So those costs were and you would need a topo and legal survey. We would normally suggest, especially if you're widening the roadway, that's always prudent to do. So those costs you're looking at about, we estimate it just based on what we normally see is probably somewhere around 110,000 just for the study. So I mean that's sort of what we came up with. And yeah, I guess in the end for recommendations, I mean it was sort of put back to council as to what the best option was. Both work, but it was sort of just to present the options and say, well, these are your possibilities, and moving forward, all we did was we suggested that you probably should start planning one or the other at fairly soon in the future, especially replacement, because your approvals and studies are probably going to take you the better part of a year these days, because there's certain timing windows when you can do things, and reports take a while when you have 5 or 6 different consultants involved. So that would be something you'd probably want to start on relatively soon, sort of this year to be able to construct next year or the year after. So I think that pretty much sums up what we looked at. So I don't know if that gives a good summary, but I'll maybe leave it open if people want to ask questions and pick my brain, and I can hopefully answer them.
And well, council, when you're thinking a bit, as a recap, like essentially what we're saying is that there's a good news, there's a bad news. The good news is that the posting is actually satisfied the condition of the structure today. So if we try to say, okay, what's the good news out of this? So that really is the good news, that the posting today is good. So there's no requirement to close the bridge or essentially to change the. So I know that since we were talking about, since how long ago was the last study done? And it lasted a while. So I think you're good for a few years with the condition and the maintenance way that it's being dealt with. So that's the good news. The methodology of 1, rehabilitation versus 2, reconstruction, I think it's really the mindset of understanding the rehabilitation only has a life of 15 some years. So after 15 some years, you would have to reconsider closing the road. You'd be back in the same condition, and you would be facing potentially a reconstruction at that time. So really, it's kind of a decision ultimately that we're not going to be taking tonight, but it's a decision that will eventually become, do we want to spend $1 million that will potentially last 15 years, and then we're facing a reconstruction with inflation will be more money than the 3 million? Or do we simply gear in the next 3 to 4, 5 years into the reconstruction process? Meanwhile, we start to implement some of those studies to have a design ready, construction ready, shovel ready, and with luck, potentially apply for funding. And in this case, I mean, if the money was funded to a 90%, or then it would be obviously better for council to because of all the other infrastructure needs. But there's also one more kind of point of discussion with council in the future that, when you have a further discussion on this, is going to be like, altogether, do we want to close the bridge? Because that's also another option. Because if you evaluate, the use, the needs, ultimately speaking, that's going to be a decision of, going ahead, doing the design and all these things is one thing, but ultimately, if it's an out-of-pocket investment, you may also consider that option. So I think that really kind of recaps everything. And as Tashi mentioned, if you have a bit more like technical or more specific questions, then I'll stay quiet and I'll let you ask away.
Do any of the councilors have any questions? Go ahead, James.
On the bridge, if we wanted to add a little bit wider to have a walkway, where does that fall figure in the 3 million or in the 2.5?
Well, we sort of estimated the 2.5 million we came up with. That's if you wanted to replace it essentially with a single lane roadway. And then we said 2-lane roadway is 3 million. But we sort of, that if you wanted to add a sidewalk to the single lane option, I would say you're probably in around that 3 million. I mean, those are it might come in at the 2.5, but yeah, you would take the single lane, add a sidewalk. So yeah, you'd probably in and around that 3 million. You'd have some work to do on the approaches as well. It all depends on what you want out of it. If you want an approach sidewalk leading to it, or just an outboard sidewalk for fishing or whatever. But yeah, I think we estimated it's probably around $500,000 to add a sidewalk to either of those two options. So yeah, you're looking at about 3 million, I would think. So.
Okay. Tom, do you have a question?
Yeah, I presume the ownership of the shoreline there is because it's not Mill Pond, but the pond behind the dam. Is it owned by Hydro One around each side of both sides of the bridge?
I'm not sure.
In the study, the focus of the investigation was really to investigate the structure. As Tashi mentioned, in both cases, there is a recommendation of doing some survey work. So essentially, the legal survey becomes more prominent when you're doing a reconstruction because of the widening and so forth. So in the last summary pages of alternative, no, getting ready towards alternative 1 or towards alternative 2 is when the survey component would come in. So the questions about ownership of land would be dealt with at that time, I would say. But at the moment, we're really not aware of what ownership is where.
Where I was coming from is, if we went with a new bridge, had you thought of putting another bridge beside and keeping the old one open while there was construction of the new one?
I don't know if we can, Tom, because the road is so narrow, there's no, like, it's a single lane essentially. Just in there.
I think it would cost way more because you'd have to build new abutments, and what they're
Well, they're
proposing,
building new abutments for the new bridge.
I think they're just
It's just
expanding.
a matter of a bit of fill, and there is the boat launch right beside it already. So I've been under that bridge with the boat and it over.
Yep.
And I just wondered that way you could keep the bridge, because that's the road up the Highway 11's closed. How do we get to some of the houses or for mutual aid or some of the other? That we have no access over that bridge.
You have to come from Trevor Creek.
Yeah. So when he was talking earlier, he said 35 meters is length. The new length would be 40 meters, so he's adding
Yeah.
length to the bridge, which is going over top of the old abutments.
Yeah, but I was talking about, is there any way of putting a bridge, new bridge beside it?
We can
I
do anything.
understand that they're going behind, because that'd be the way to do it, because you have the existing abutments and you're gonna be into the dry. You're gonna be into the dry working behind the old abutments.
Yeah,
That's why you're probably extending it, right?
yeah,
Keep out of the water, yeah.
yeah.
You're working in the dry.
There's maybe another point too, is that when you're considering the way that the topography is on the opposite side, it's almost like a little bit of an island. So, I mean, shifting to the side is obviously always an option in the case of trying to consider, is it worth keeping the old structure to keep traffic open? I imagine that would be the intention in that question.
Well, yeah, it's because of the emergency vehicles, and the idea of Highway 11 was shut down.
Okay.
I know that was a concern from when I talked to a council in Powassan, when we lowered the limits there for a while. They were very concerned about fire trucks and snowplows and stuff getting through.
It is definitely a valid question, and at the end of the day, I think it's a risk analysis versus the cost that would be evaluated. I would have the tendency of thinking that, and Tashi might confirm, that ultimately speaking, remaining within the same footprint is going to end up being the recommendation on like when we really look at it. But there is also, when you do a bridge study like this, you look at the impact and the detour and the length of time that it will take for the bridge reconstruction. So that's when you do further evaluation onto like how many residences, what's the detour, and for how long. And but yeah, those, I mean, there's always an impact when traffic is impacted by a bridge. It's always one of the first thing that we look at. What's the detour? How long will it take? But generally speaking, for all the structures I've replaced, and Tashi might talk because he's done, I've done maybe 1% or maybe not even of the amount of bridges he's done. So, but essentially maybe Tashi can comment on the relocation versus staying in the same footprint.
Yeah, I mean, for that specific site location, I'd probably tell you, you could relocate it. Usually the relocation's done if there's, well, maybe not, if there's a specific reason why you couldn't close that existing bridge to put the new one in, or if there is a need to widen the roadway or realign the roadway. That particular location, from what I recall from site, I mean, that there's almost sort of a causeway built up to the bridge on both sides. So if you were to actually physically relocate it, say you want to keep the existing bridge open and put the new bridge adjacent to it and then realign the roadway, that would probably be a fairly significant undertaking just because of the site location. You already have sort of a defined approach roadway, and to go off to the side now, you're probably putting a lot of fill in the waterway, and you're doing you're realigning the road. So that's probably a much bigger undertaking. And I would think that would be significantly more costly. The only time we look at those options is if there's an absolute need to keep the roadway open and we can't stage the work. You wouldn't be able to stage the work here because it's a narrow bridge. So I think for that perspective, I would say that's probably not a cost-effective option to do it that way. If you can close the road, and I think there's a detour available, that would be the simplest to put it back in a similar location.
That's quite a ways around the detour for some people. The other thing is, we'd save the contractor that we give them access to both sides when they're building the new bridge. Otherwise, they're going to have to drive around a long detour to get from one abutment to the other.
Yeah, I mean, they may have it. I don't know how they would stage it, but they would probably stage it where they'd have a main staging area on one side, or they may even have something on both sides, depending on, they have to construct the abutments. They can do that probably separately from each side, and then they would drop the truss in place, and then they would have access over the bridge. So I don't know that it would be a huge hindrance to them, but yeah, it would be something they would have to consider. So.
Okay, I was just curious if there's any thoughts given to it. And the other thing in your costs, anytime I was involved in construction, if you figured $1 million, it'd end up to $1.5 million.
Yeah. I mean, that would be one, comment to make on a rehabilitation is well, same in my experience. Anytime you fix a bridge and you're dealing with existing, you can plan for certain things, but there's always unknowns. So, you could get into a case where certain components are a little more deteriorated than anticipated once you clean them. So yeah, there is that potential with a rehabilitation in particular that things could be slightly different on site. Now, replacement, you could still run into that too, but that would be usually, some sort of ground conditions that differ from what's anticipated. But those things are probably a little easier to control, because if you know your ground conditions, well, you're building all brand new. So it's a little more, the costs are a little more fixed in that sense. There's less margin for error in that perspective anyway. So, I mean, the costs are more, but your deviance, your percentage would be less, that the risk that you have overruns. So.
A new bridge would be more of a fixed cost other than the abutments.
Yeah, but even the abutments, if you get a good geotechnical study done, you should know exactly where the rock is or what your subsurface are. So it shouldn't be that complicated for the contractor. Like I said, a drawing should be able to prepare with enough info that there's no real margin for error, basically. So.
Okay, thank you.
And if I may add, Councillor Marchand, it's like when we look at the environmental assessment, the EA, Tashi referred to an EA process. That's ultimately a document where we have a lot of communication with like stakeholders and people that use the bridge and residents, and there's really a communication that involves trying to reach out to the people you're referring to that would be impacted during the construction, and have a really good communication to make them aware about, what is it that we're proposing, and ultimately how long will it take. Like, those are eventually questions that will be answered. But again, today, they're really good questions, but they're laid out into the remarks of what needs to be done ultimately in the next steps.
Antoine, I'd like to thank you for the information you gave us tonight, and we'll be moving forward with discussions with Powassan, and I'm sure Dan will keep you aware of whatever we've got or whatever we're able to do.
No, that's great. I very much appreciate you having us tonight, and next time hopefully we'll be in person.
I hope so. Thank you very much. Have a good evening.
Okay, thank you, everybody, and everybody take care. And yeah, like Antoine said, I echo the sentiment. Hopefully we can meet in person at some point.
Great. Thank you. Good night.
Okay, take care. Good night, everybody.
Okay, that was excellent.
Very interesting.
The only part is we have to get Pawassan to the table. You'll notice Cody wasn't there tonight. That's Pawassan's engineer.
Okay.
So
Was he invited?
Yeah, we invited them,
Okay.
he was invited. So,
Okay.
because we did try and get, so we could maybe put the two councils together on Zoom to, so everybody hears everything at the same time.
Exactly.
No,
They will get a copy.
Yeah, they've got, I think, Anton sent Cody a copy of whatever you guys got. They've got. Absolutely, no, I mean, that's why I tried to keep it open for them to do.
Right, and search up what. They're not the ones that did the nipple one.
I don't think there's anything.
yeah, sure.
You can help out in this way.
Okay. Okay, well, in that case, if you look here, number 3 was presentation 2020 financial statements. Oscar Poloni with KPMG. We're going to try to get Oscar if we can. And I believe we'll start with the corporation. The Township of Nipissing.
You can access them.
I believe so, but there he is. Good evening, Oscar. Can you hear us?
Perfectly, Your Worship, and good evening, ladies and gentlemen. Apologies for not being able to be there in person, but given everything that's going on, next year for sure is the only comment I will make. So,
You get your vaccine.
yeah, it's interesting, Your Worship. I had a very productive morning today because I managed to get my mother her appointment for her vaccination because she's over 80, and I caught a raccoon that's been crawling around my house. So by 7:30 this morning, I was feeling I was done for the day. So it was a big one. So Chris, I'm not sure if I'm able to actually share my screen.
I can fix that for you right now.
Thank you. Just if I may, Council, I've taken the liberty of asking Carissa Vandewey to join me tonight. Carissa is the manager that works on the financial statement audit for Nipissing, and I was hoping to bring her into the meeting so that she could sort of close the loop on this and see how everything gets approved at council. So if you'll indulge us, Carissa is on the line as well.
Hi, everyone.
Good evening.
Hello.
So Council, if I may, we've put together a brief presentation that's intended really to walk through the financial statements and provide a bit of an explanation and an overview of the audit process and the key findings. So we are prepared to issue what we call an unqualified or a clean audit opinion. And this is the highest level of assurance that you can receive under Canadian auditing standards. So the short answer is from a financial reporting perspective and from an audit perspective, it really doesn't get better than this. What you will find is in our audit opinion, we make reference to materiality, and materiality is the level of errors that we can absorb before we have to change our audit opinion or require your staff to start to make adjustments. And consistent with other municipalities, it's generally based on a percentage of revenues. So for Nipissing, materiality is about $105,000. And materiality determines a number of things from an audit perspective. It drives how big our samples are. It drives trend analysis and other aspects like that. But what it also drives, Council, is what we call the posting threshold. And the posting threshold is the level above which, if we find an error in the financial statements that isn't corrected, we actually have to report it to council at this meeting. And so the posting threshold is 5% of materiality, or $5,300. The audit this year has gone well. To be very honest with you, the audits typically always go well. We get great support and great documentation from Chris. What I will say, council, is as a result of our audit procedures, we did not identify any audit differences, either corrected or uncorrected, that are above the posting thresholds. We didn't find any significant weaknesses in your system of internal controls and financial oversights in terms of how you manage your transactions. There were no difficulties with management. So this was our first year of actually auditing remotely, because your audit goes so early and you are the first municipality in my schedule that we get to the audit to. Last year, we didn't have to worry about the pandemic. So everything was wrapped up prior to the pandemic. This year was a bit differently. Remote auditing went well. We're very happy with the level of support. There were no scope limitations that we've identified. So basically, we were able to obtain all of the information that we had requested and all of the information that we needed as auditors. And lastly, there were no changes to our planned audit approach. So we look at municipalities, including the township. We look to identify risks. We basically audit all of your numbers, but we spend more time on things like your revenue, on things like your payroll, on things like your capital. We weren't required to change our audit approach significantly as a result of our audit procedures. And all in all, council, what I would say, it was a very good audit. It went very well. And we're very appreciative of the level of support that was provided to us by Chris. So in terms of the financial statements, the first statement is your statement of financial position. And this is a summary of your assets and your liabilities at December 31st, 2020. And if you look at your financial statements, what you'll notice is that there's about $3 million that is sitting in cash and sitting in short-term investments. You'll find that's up a little bit from last year. Last year, the number was about 2.6 million. So there's 3 million this year. The big change was in the current year, you actually issued $425,000 worth of debt to be able to buy capital assets. So instead of funding that through your cash reserves, you actually had debt to support that. So that was a bit more favorable from an impact perspective on your cash position. You can see that your investment balances are significantly higher than they were last year. Last year it was about 5,000. This year it was 2,005,000. And the reason for that was you purchased a $2 million GIC in June of 2020. So you've made the investment, you're getting some interest, recognizing interest rates are low. Your taxes receivable of about $152,000 is actually lower compared to the prior year. So you've done a better job with respect to your collections. And we've got a bit more information about this in a later slide. And similarly, when you look at accounts receivable, numbers fairly consistent with the prior year. From a liabilities perspective, you could see that your accounts payable and accrued liabilities have gone up from about $175,000 this year to 220,000, or sorry, 175,000 last year to $220,000 this year. There's a number of things that are included in this accrual. The last bill that you receive for the month of December for the OPP, for example, which gets paid in the new year, our fees, for example, but also included in this are payroll related accruals. So this would be overtime banks, vacation banks, and other payroll amounts that are earned up to March 31st and paid afterwards. What you'll find is that your vacation banks and your overtime banks have actually gone up this year by about $44,000. I would suggest the impact of the pandemic has had something to do with that in terms of the ability of people to take vacation off, as well as the amount of overtime worked. You can see that your municipal debt has gone up from about 35,000 to 409,000. And as I've mentioned, there was debt issued this year, but just before that number is deferred revenue. And the deferred revenue number is money that you receive during the year that you haven't earned yet because you haven't spent it yet. And in the case of the township, what you can see is that your deferred revenue has actually gone down. Last year, it was about $178,000. This year, it's about $124,000. And there's really two components to why your deferred revenue has changed. Last year, there was about $40,000 worth of revenue you received from the Association of Municipalities of Ontario under the Main Street program for capital. You hadn't spent that last year, so you set it up on your books as deferred revenue. This year you've spent it, so that number's come down because you've taken it into income. Similarly, last year there was about $165,000 of gas tax that was deferred. So under the federal gas tax program, you receive money on an annual basis. You don't necessarily have to spend it every year. So you're able to actually bank that and then take multiple years. So what you'll find is, and I'll apologize, there's a typo here, but this year your gas tax deferral was about 147,000. Last year it was about 165,000. And the reason for that is that you've brought in more gas tax revenue to be able to fund your capital projects. In terms of the debt, as I've mentioned, there was $425,000 of new debt that was outstanding, and really the debt was issued for three purposes. There was the purchase of a snowplow for about $313,000. There was a vehicle that was purchased for about $71,000, and then there was an all-terrain vehicle, or a UTV, that was purchased for your fire services to about $41,000. So you have issued $425,000 of new debt. During the year, you also made principal repayments of $50,000. So the net increase in your debt is about $375,000. You'll notice the last liability on the financial statements is your landfill closure costs. And as we've discussed, Council, in the past, Ontario municipalities are required to set up a liability on the books for the future cost of not only closing your landfill when it reaches the end of useful life, but also the cost to monitor it over its contaminating lifespan, and which is typically about 20 years after the landfill has closed. So this is an estimate that's prepared. It's developed in conjunction with engineers that are retained by the municipality. And in the case of Nipissing, I believe it's ACOM. And what they do is they calculate how much of the landfill you've used, how much useful life is remaining, what it's going to cost. And then for financial reporting purposes, we have to present value that, if you will, to today's dollars. What you'll find is this liability is increased by about $278,000. And the reason for this, Council, is your engineers, by looking at your landfill this year, have changed certain assumptions. The main change that they have done is they've reduced the remaining lifespan of the Bear Creek landfill. So last year, it was estimated to have 44 years of useful life remaining. This year, the engineers have pegged that at 30 years of useful life remaining. So what they've done is they've actually brought the closure closer in time. And what that does from a net present value perspective is it actually increases the amount of the liability. So what you'll find, Council, is what's driving the big increase in your landfill closure is the change of estimates. And Council, I want to make this very clear. You do not currently owe $765,000. You will not be required to write a check for $765,000. This liability will start to be incurred sometime in 2050, based on 30 years of useful life remaining. And at that time, that cost will likely be spread out over 20 to 25 years. You have to pay some money to close the landfill to cover it, and then you'll have to pay other amounts over the 20 years to monitor it. So, and Council, the reason why I'm saying this is, unlike the OPP bill, unlike the amounts you owe your staff for banked vacation, this is not a check that you're going to have to write within your term. And if I could be honest, Council, this is an accounting adjustment. This is an accounting liability. It doesn't have a cash flow requirement. And the reason why I say that is because $765,478 is a big number. But what I want you to know is that this is not something that you're necessarily going to have to pay for another 30 years. So I just provide some context, if you will. What you'll notice towards the bottom of the statements, you have your non-financial assets. These are investments in assets that aren't going to be converted into cash, or that aren't actually going to result in collections. And the biggest chunk of your non-financial assets is your investment in your tangible capital assets. So this is the investments in your buildings, your vehicles, your roadways, what have you. The tangible capital assets, what happened is when you buy capital assets, you put them on your books and you amortize them over the useful life. So as you buy them, this balance comes up. As you depreciate them, this number comes down. So during the year, you bought $843,000 in capital additions, and you had depreciation expense of $668,000. So it goes up by 843, it comes down by 668, which gives you the net change of about 176,000. In terms of other non-financial assets, you can see that your inventories have increased as well. Your inventories are comprised primarily of your public works stockpile, and there was an increase in the level of your aggregate at year end by about $71,000. So this is what drives this number up. So Council, if I may, just a bit of information about some of the numbers on your financial statements. We talked about your taxes and your other receivables, and what you'll find is that your taxes receivable are actually comprised of three balances. There's monies that are owed for the 2020 year, so basically your current taxes. There's monies that are owed for arrears, so these are taxes for 2019 and prior years. And then there's interest and penalties that you would calculate on those arrear payments as well. What you can see, Council, is the balance of your taxes receivable, which is about $152,000, is actually current. And so what that means is the municipality, if I may, has done a very good job of actually collecting your taxes and not letting a lot of taxes go due. And what you'll find is that under the Municipal Act, you can basically let property taxes accrue for 3 years before you take action on the property owners to collect it. What I would suggest is you've actually done a very good job of managing your tax collections. And just for the information of council, at the top of the slide, this is the percentage, your taxes receivable as a percentage of your municipal levy. And what you'll find is that over time, you have reduced the amount of taxes outstanding from about 9.5% in 2016 to about 5.6% in 2020. And what that means, council, is back in 2016, for every dollar of taxes that you levied, you were owed 9.5 cents at year end, which is a pretty good percentage to talk about in general. But what you've managed to do over the course of 5 years is actually drop that to 5.6% or 5.6 cents on the dollar for taxes. And I think from a collection perspective, the decrease in your taxes receivable over time really shows up this year because, to be honest, council, you don't have a lot of taxes outstanding. What you'll find is the biggest chunk of your accounts receivable is actually your HST. And HST receivable really is determined by when you spend things. If you have a lot of capital that's spent at year end, you get big refunds for HST back. So that may be driving this. There's a little bit of shared engineering costs that you have with another municipality where you're looking to collect those, and then some other receivables as well. So not a big investment with respect to accounts receivable. What you'll typically find, council, is if you're looking at other municipalities, they may have higher receivables than you. Predominantly, the reason why is because of water and sewer charges, which oftentimes will have big receivables at year end. You don't provide water and sewer, so naturally that's not inside your accounts receivable. So if you are running a comparison to other municipalities, you need to be cognizant that in some cases, this is driven by the type of service you provide. I mentioned your accounts payable and I mentioned your deferred revenue. And what you'll find is that your accounts payable is really comprised of a couple of different things. I mentioned the last bill from the OPP. That's about $28,000 that you owe at year end, and that is very much a timing perspective. There's a variety of deposits that the municipality will hold from developers, even your fitness center, for example. So those are recorded as liabilities. It's about $42,000. Your payroll liabilities, which includes the amount that you owe from the date of your last pay period to year end, plus your vacation banks and your overtime banks, is about $51,000. And as I mentioned, council, earlier, this is up about 44 grand from prior year, predominantly because of a buildup in the vacation banks and the overtime. The biggest component of your accounts payable, however, council, are advanced tax payments. And these are where taxpayers have actually prepaid their tax bills. And so you typically will pick this up as a result of pre-authorized payments. And so because of that, of the total balance that you're recording, about $83,000 is actually tax prepayments that you're going to take into revenue next year. So council, if you'll recall my comment, not only have you been collecting your taxes at a faster rate, in some cases, what you actually have is because of your prepayment arrangements, you have some prepayment of taxes as well, which I would suggest reduces your risk from a collections perspective. I mentioned deferred revenue, and last year, as I've discussed, your deferred revenue was comprised of the Association of Municipalities of Ontario Main Street funding, the gas tax, and the parkland. So there is a note to your financial statements. What you'll find this year is the bulk of your deferred revenue is actually parkland, and the reason for that, once again, is because you've drawn down on your AMO revenues, you've taken it into revenues, and you've also significantly drawn down on your gas tax. In terms of your capital additions, council, just for your information on slide 7, we've presented your capital additions that are greater than $15,000 individually. So you can see, for example, the largest purchase was with respect to the truck, where you had the long-term debt associated with it, significant amount invested with respect to roads capital, plus some other assets that you've purchased. We've talked about the UTV, which is the Polaris Ranger. We talked about the crew cab plus some fire equipment. Interesting, you bought some Clorox electrostatic units, and I will confess, council, I'm not sure exactly what those are. I think I know, but I'm also sure that if it wasn't for the pandemic, you may not necessarily have actually purchased them. And so what you're finding is, in some respects, what you've purchased from a capital perspective actually reflects the pandemic. So the next statement, council, in your package is the statement of operations. And this shows your revenues and your expenditures for the year, plus your surplus. And you can see that the largest source of revenue that you have is with respect to municipal taxation of about $2.7 million. That reflects your budget, that reflects assessment growth in the community. You can see that your next largest source of revenue is your government transfers and grants. And last year, you received roughly $1.15 million, predominantly from the province of Ontario for grants. This year, the numbers dropped to about 906,000. But it's important, council, to recognize that not only has the number changed, but your funding pockets have changed as well. So the main grant that you receive is what's known as OMPF, Ontario Municipal Partnership Fund. Just as a trivia, if you're ever at a provincial conference, in Southern Ontario, they call this OOMPF. They don't call it OMPF, and don't ask me why. What you can see is that your OMPF revenue has actually gone up marginally this year and represents the largest component. What you can see, council, is funding that you receive from the province under the Municipal Modernization Fund has decreased significantly on a year-over-year basis. So council, as you may recall, last year, you received in excess of $400,000 for the Municipal Modernization Fund. This year, you receive $30,000. And so that funding has changed significantly. And that accounts for a significant component of that drop in your revenues. Offsetting this, however, is the receipt of about $160,000 in funding under the province's Safe Restart program. And these are costs that are intended to help, or this is revenue, sorry, that's intended to help defer some of the costs or defray some of the costs associated with the pandemic. And what the province has basically said is, here's the revenue, we require you to report on the use, but if you don't use it all, you're allowed to put it into reserve so that you can use that for future expenditures. And based on that, we've recognized the full 159,000, what have you. There is no repayment option associated with this at this time. There may be in the future, but at this point, we don't know. OCIF funding has remained fairly consistent on a year-over-year basis. And council, as I've discussed, last year there was some Main Street funding that you brought into income. So the transfer from the obligatory gas tax, that is the gas tax funding that was sitting in deferred revenue that you've brought in this year. And you can see that that number has come up. Other expenses and other revenues decreased by about $36,000. And the reason for that is because you had lower interest this year, a combination of reduced interest rates, a combination of reduced interest on taxes. From an expenditures perspective, councils, you can see that your total expenses were about $3.7 million compared to $3.5 million the year before. Expenses are generally consistent on a year-over-year basis. You'll see that your environmental services costs have actually gone up. They've gone from about 219,000 last year to 328,000 this year. As council will recall, during 2020, you took a position at your landfill and you changed it from contract position to full-time. And what that's done is that's increased some of the costs. In addition, there were costs associated with a landfill study that were undertaken during the year that bring this cost up. Recreation and cultural services have actually gone down by about $48,000. And when we look at your financial statements, council, we can see that you have lower salaries with respect to the museum. We can see that you have lower salaries with respect to your recreational facility. And the reason why is because you were closed for COVID. So this is an example of how your expenses would have been impacted by the pandemic. Council, our audit is complete. What we require is we require council's approval today. We actually have final financial statements ready to go. We also need staff to sign a management representation letter, which basically says they've given us all of the information. There isn't anything material they haven't disclosed, what have you. As I mentioned earlier, there were no difficulties encountered during the course of our audit. The audit has gone well. We get great support and great documentation. And once again, no significant issues that we found from an audit perspective in terms of your internal controls. They work as well as they can, recognizing you don't have a lot of bodies to separate duties and to do internal controls. The last point, as I mentioned, is there is no specific financial reporting requirements that we've picked up associated with the COVID-19 pandemic. So the province of Ontario hasn't specifically asked auditors to separately disclose funding for COVID. They haven't asked auditors to separately disclose costs for COVID, nor have they asked us to provide a special report on things like the safe restart funding. And so because of that, council, we've really, any COVID impacts, we've basically consolidated into your financial statements without separate disclosure. There is a note to the financial statements that talks about the impact of the pandemic, new funding sources and changes to your operations, but it is pretty much high level disclosure because the ministry hasn't asked us for anything specific. So, your worship, members of council, that is an overview of your financial statements and the audit for the year. Once again, I'd like to thank Chris for her support provided during the audit. If there are any questions, more than happy to answer them at this time.
Councilor Marchant.
Yeah, on regards to the Bear Creek landfill on page 4, I'm wondering why Wolf Lake, because Wolf Lake has extended, I believe, it's got a longer lifetime.
Yeah.
Why Wolf Lake wasn't mentioned there with, that would counter the shorter time for Bear Creek?
Through you, your worship, the estimate of your landfill closure costs considers both landfills. So it includes Wolf Lake plus Bear Creek. What we tried to do in this was we tried to highlight sort of the major changes that were driving the change in the liability. And by taking the Bear Creek landfill and cutting the useful life in half, that's placed considerable increase in your estimates. And if you look at the financial statements, council, there is a note to the financial statements that disclose all of the details with respect to the assumptions, including useful life. And it does talk about both Bear Creek and Wolf Lake. The only reason, councillor, we've highlighted Bear Creek is because it was such a significant change that it drew the number upwards and it increased the liability. I hope I've answered your question.
Yeah, I just thought with, I thought Wolf Lake went up quite a few years. And I just wondered, because there's, significant change there.
So I'm just gonna pull up the note, Counselor, if I may, just to be able to look at the change.
It's in the other one.
This one from,
Wait, this one here, take this.
So the issue with the Wolf Lake, landfill is the useful life has actually been extended to 113 years. And if you look at the note, which is note 7 to the financial statements, Counselor, to your perspective, that is right. It's dropped from about $200,000 to about $17,000. So it does offset it. It's just, you could see the Bear Creek has gone up by about $400,000. So to your point, Counselor, you're right. The changes to Wolf Lake really did offset the Bear Creek increase, and my apologies for not pointing that out.
Okay, thank you.
any other questions?
We have a resolution later on the agenda to adopt the financial statements as presented, which we will pass along to the personnel.
Okay, Oscar, I don't see any other questions. I guess thank you is in order, and we do have a resolution later in the meeting to accept this. So unless you have anything to add, I'd like to thank you for being here tonight, if not in person, but in spirit.
Well, thank you, Council. If I may, we did provide Chris with a package that includes benchmarking from a
I gave that
municipal
out.
perspective. Yeah, and in the interest of time, Council, I think it's fairly self-explanatory. Just a couple of notes, if I may. One is your taxes from a per household perspective actually compare quite favorably to the peer groups that we have. So you're kind of in the middle of the pack. One of the comments that I'll make, Council, is much like I alluded to in the financial statement presentation, it's important to recognize the impact that service levels will have on taxation levels. So places with low levels of service automatically have low taxes. Places with higher levels of service, for the most part, will have higher. So it's important not to draw conclusions with respect to efficiency, if you will. As I've mentioned, your taxes receivable as a percentage of your total levy compares very favorably and is quite low in comparison to other municipalities. So you do a good job in terms of managing your taxes. Your debt is relatively low. In Council, I want to caution the basis of the comparison that we used for these slides was the 2019 financial information return, because not everybody's 2020 information is available. And so this doesn't have the $475,000 worth of debt you've issued this year, but you can see that other municipalities are carrying significantly higher debt loads than Nipissing. Reserves, middle of the road. General governance costs, which is the cost of administration for the municipality, is towards the lower end of the range. And you know, the comment is, it's not a significant municipality in terms of size, in terms of scope of service. And that's not intended to be a value judgment. It's just, you're not North Bay, you're not Barrie. And so your administration costs fare favorably. Fire costs are a bit towards the upper end of the range, but Council, once again, this is service. What you'll find is in absolute dollar values, your costs are actually comparable to other municipalities. They all spend somewhere between $250,000 to $400,000 on fire. This is the case of where the denominator may actually change the math. Your road costs, middle of the pack and comparable. Your recreation costs are towards the lower end of the range. And once again, Council, this reflects a bit of your service levels and what you as a municipality provide. So, your worship, members of council, we just wanted to give you some benchmarking in terms of where you stand. One of the things that we've committed to the municipality and that we've done in the past is we actually do a bit of a deeper dive, which is a bit of a state of the township analysis, where we look at income levels and taxation levels and other stuff in more detail. I am more than happy to do that for council if you would like to see that maybe as part of your budgeting process for 22. If you'd like a bit of a deeper dive with respect to your performance and how you fare, please let us know, and we're happy to come out and have that special presentation to you.
Thank you ever so much. We appreciate that, and it's always good to see the benchmarks. And I don't know, I'm pretty happy with the way this has come out and happy with the job you've done. So I thank you, Oscar.
Well, thank you, Your Worship.
Have a good evening.
You as well. Thank you very much.